Hello everyone. So welcome to this short session. Today we are going to be studying ISA 250. Okay. Now ISA 250 pertains to the laws and regulations that can basically arise, and what you as an auditor would need to do when it comes to compliance with laws and regulations. Obviously, whenever you are in any working environment, in any working country, you know that there are a lot of regulations and laws that you must abide by. Now we know that ignorance of law is no excuse. And obviously, since we as auditors are part of the working environment, we obviously have to be aware of the different laws and regulations that can arise in an audit. Okay. So the title of this standard is basically the consideration of laws and regulations in an audit of financial statements. Okay. Just give me 1 second. Okay. So ISA 250 is the consideration of laws and regulations in a financial statement audit. Okay, so the detailed summary of ISA 250 introduction defines the auditor's responsibility to consider laws and regulations during financial statement audits. Okay, what does it do? It categorizes laws and regulations into those with direct financial statement impacts and those fundamental to the entity's operations. Okay. See, you are not supposed to be, an expert in the legal framework, but you as an auditor must be aware of the different types of laws that can exist in an audit of financial statements. It acknowledges the limitations of the audit in detecting all instances of non-compliance. As we know, the concept of again reasonable assurance that you cannot be 100% sure. So, and similar, in an audit of financial statement, you cannot be 100% sure, hey, that when you've done the audit, that everything is compliant. What are the responsibilities? Now, who's responsible for this compliance management? With oversight by governance bodies ensures compliance with legal and regulatory requirements. Okay. This is the responsibility of management to abide by the laws and regulations, not yours as an auditor. It is the management's, excuse me, responsibility. However, where do you come in? The auditor comes in when the auditor's responsibility is to identify material misstatements due to non-compliance while recognizing inherent audit limitations. Okay? That, okay, you cannot detect everything. Audit has its limitations. However, barring that fact aside, you are responsible to identify any material misstatement. Now, an example can be that you have, let's just say, a case ongoing, and maybe you have an environmental breach in the company, right? Obviously, you would have to basically understand that, hey, this business is affected by these laws. Now, for example, if you are auditing the banking sector, there might be some prudential regulations, banking regulations that you have to take care. And you can say, hey, based on the breaches of these laws, there can be a disclosure, non-disclosure of the penalty amounts, or, maybe the contingencies and commitment notes is wrong, and so on and so forth. Examples of non-compliance include fraud, obviously, because a legal violation, environmental violations, oil spills, etc., or non-adherence to industry-specific laws. You know, for example, if you're in the pharmaceutical industry, maybe you break their laws. If you're in the banking industry, you break the central bank or the banking regulations or laws. Then in the or if you're in the insurance industry, maybe you break the insurance industry's laws. So you as an auditor have to be on the lookout for those laws. Objectives, again, what is this ISA for? To obtain sufficient evidence about compliance with the laws directly affecting financial statement amount and distributions. Now, the key point is that only those laws that affect your financial statement, okay, amounts and disclosures, your income statement, comprehensive income, financial affair balance sheets, equities, statements, cash flows, notes, anything that affects these financial statement areas, you as an auditor are supposed to be responsible for those. Identify material non-compliance with operational laws that could significantly affect the entity's financial standing. Okay. Any laws, that could affect the financial standing. For example, you do an oil spill, and then maybe, or environmental breach, and you face such a huge penalty that you may not be in business also. So all of these are material issues. Take appropriate actions, including non-compliance to relevant authorities when necessary. Obviously, since the legal framework is involved, you might have to basically inform the relevant local authorities as well. Yes. Now, how do you do that? So this is the requirements. You have to understand the entity's legal and regulatory framework, including industry-specific laws. You have to understand the business. It's banking, okay, banking laws, pharmaceutical, maybe pharmaceutical laws. You know, maybe it's hospital, you have healthcare laws and regulations. So you have to be aware of those laws. Perform inquiries with management and governance. Okay, you have to basically ask them, and review correspondence with regulatory bodies. You have to see, okay, are there any letters or issues or notices that can, point you towards any non-compliance. Remain alert to unusual transactions, penalties, or fines indicating possible non-compliance. Now, the easiest thing is you just go and check the ledgers, the first and foremost, of legal expenses and any penalties and fines. Now, even though, see, penalties, even if the amount is small, the non-compliance can be a huge amount, right? Later on down the line. Or, the penalties may be indicative that, hey, you broke this law or that law, or maybe, that law breaking can basically indicate that, hey, down the line, or, there might be some other breaches that you as an auditor might need to be aware of. Document findings and professional judgment related to identified or suspected non-compliance. Auditors should leverage the entity's internal controls, compliance functions, and governance frameworks to assess compliance. Indications of non-compliance may include regulatory investigations, unusual payments, or discrepancies in transactions. Right? So you have to leverage the entity's internal controls, compliance function, governance frameworks to assess compliance. You have to basically understand, are they following the laws? Are they doing their thing accurately? Are there any breaches? You have to basically, what are the indicators? You have a regulatory investigation. For example, your central bank is conducting some sort of random investigation on a bank if you're auditing a bank. Unusual payments. Now these can be indicative of illegal sort of transfer monies made to different uh, people or discrepancies in transactions. So all of these will say, hey, there might be some sort of a legal breach here. Seek legal or expert advice. Right? What are the application provide practical consideration? You seek legal or expert advice for complex situations. Obviously, see, since you're not a legal expert, you don't know the far-reaching impact of any law breach. You cannot, because you're not a lawyer. So you have to find a lawyer for complex situations of when determining appropriate actions for suspected violations. Okay? So you might need to have some sort of a legal framework present and ask the lawyer basically. for any difficult areas which may involve a lot of legal work. Okay, so this was a small standard. So thank you so much for this, and hopefully catch you in the next session. Bye bye.